For decades, they seemed like a harmless perk, a simple transaction: collect points, get discounts, a coffee shop punch card, an airline mile, a supermarket coupon book. These were the hallmarks of customer loyalty programs, promising a little something extra for choosing to spend your money in one place over another. They were designed, we believed, to reward us, to say thank you for our patronage. But behind every seemingly innocuous loyalty card, every digital punch, every accumulated point, lies something far more complex, far more powerful, and arguably far more valuable than any discount you've ever received. This isn't just about appreciation, it's about an intricate web of behavioral psychology and unprecedented data collection. What began as a simple thank you has transformed into a multi-billion-dollar industry, not merely offering rewards, but meticulously tracking, analyzing, and even subtly shaping your every spending habit. From the humble origins of paper stamps to the hyper-personalized algorithms of today, loyalty programs have evolved into the ultimate data goldmine, creating an unseen economic feedback loop that trades convenience for a currency more precious than cash: your behavior. And understanding this evolution isn't just about consumer wisdom. It's about recognizing the hidden forces at play in our everyday economic lives. If you want to uncover the stories behind the numbers and understand how the world truly works, consider subscribing to our channel. In the grand tapestry of commerce, the concept of rewarding loyalty is as old as trade itself, but formalized loyalty programs, as we know them, truly began to take root in the late 19th and early 20th centuries. Think of the Sperry and Hutchinson Green Stamps, first introduced in 1896. Customers would receive these small, colorful stamps with every purchase at participating stores. Collect enough, paste them into a booklet, and you could redeem them for household goods, from toasters to furniture. It was a tangible, straightforward incentive. Later, the airline industry, facing intense competition, pioneered frequent flyer programs in the early 1980s. American Airlines' A-Advantage program, launched in 1981, was revolutionary. It offered miles for flights, redeemable for future travel. The value proposition was clear: fly more, earn more, fly for free. These early programs were remarkably simple in their execution. They were primarily about creating a direct, easily understood exchange of value. You give us your business, we give you a verifiable reward. The goal was to incentivize repeat purchases, to make the choice between competitors a little easier by tipping the scales with a clear benefit. There was a direct link between spending and earning, a transparent pathway to tangible rewards. But this era of simple exchange wouldn't last. A subtle shift was already beginning, fueled by a deeper understanding of human nature and what truly drives our decisions. While early loyalty programs focused on a simple transaction, a burgeoning field of study was uncovering far more complex motivators for human behavior. Psychologists and marketers began to understand the profound impact of variable rewards, gamification, and status on decision-making. Insights from the casino floor, for instance, proved invaluable. Slot machines, with their unpredictable payouts, demonstrated the power of intermittent reinforcement. Players would continue to engage, driven by the chance of a big win, rather than a guaranteed return. This variable ratio schedule proved incredibly addictive. Retailers, witnessing this psychological phenomenon, began to adapt. They realized that not every reward needed to be immediate or guaranteed. Introducing elements of surprise, tiered benefits, and exclusive access could create a stronger, more enduring form of loyalty than mere discounts. The idea of gamification emerged, turning mundane transactions into a game. Earn badges, reach new levels, unlock secret perks. Suddenly, loyalty wasn't just about saving money. It was about achievement, recognition, and belonging. Status became a potent driver. Elite tiers in airline programs, for example, offered perks like priority boarding, lounge access, and complimentary upgrades. These weren't just about comfort, they were about signaling status, making members feel valued and exclusive. This behavioral pivot marked a critical turning point. Businesses began to see loyalty programs not just as cost centers for discounts, but as powerful tools for shaping customer habits and deepening engagement. But to truly unlock the potential of these psychological levers, they needed something more than punch cards and paper stamps. They needed data. The late 20th and early 21st centuries ushered in the digital age, a revolution that transformed every aspect of commerce. With it came the explosion of digital platforms, point-of-sale systems, and sophisticated customer relationship management, or CRM software. This technological leap turned every single transaction into a data point, an invaluable piece of information. Loyalty programs, once simple tracking mechanisms, became the ultimate customer tracking devices. Every swipe of a loyalty card, every click on a personalized email, every purchase made through an app, all of it was meticulously recorded, categorized, and analyzed. Businesses could now answer questions they could only guess at before. What did you buy? When? How often? What did you buy before that? What did you almost buy? This wasn't just about identifying repeat customers. It was about understanding their entire purchasing journey. The data allowed for unprecedented segmentation and personalization. Instead of generic offers, companies could now tailor promotions based on individual preferences, past purchases, and even predicted future needs. They could identify high-value customers, understand their spending patterns, and craft specific strategies to retain them. They could also identify those at risk of churning and intervene with targeted incentives. This era marked a profound shift from aggregate market research to individual consumer intelligence. The digital footprint left by loyalty program members became a rich vein of actionable insights, transforming marketing from a broad-stroke endeavor into a precision science. But what happens when this precision moves beyond mere observation and into active influence? With the power of big data and behavioral psychology, the purpose of loyalty programs began to subtly but significantly shift. They were no longer just about rewarding past loyalty. They became powerful engines for shaping future spending habits. This transition marks what some might view as the loyalty paradox. The personalized offers you receive in your inbox, the recommended for you sections on e-commerce sites, the dynamic pricing you encounter, many are direct results of your loyalty program data. Companies leverage this information to create exclusive tiers, not just as a reward, but as a subtle nudge. Reach platinum status, and you unlock new benefits, creating an incentive to spend more to maintain or upgrade that status. These programs craft loyalty loops designed to keep you within their ecosystem. For example, a supermarket might know you frequently buy a specific brand of cereal. They might then offer you a personalized discount on their own store brand of cereal or a complimentary product that pairs well with your usual purchases. This isn't just a friendly suggestion, it's an algorithmic intervention, steering your choices. The convenience of these personalized recommendations can be undeniable, saving you time and potentially money. But the underlying mechanism, is a sophisticated form of behavioral manipulation. Companies are actively influencing not just where you shop, but what you buy, when you buy it, and sometimes even how much you'll pay. The line between helpful recommendation and subtle coercion becomes increasingly blurred as your digital footprint creates a profile that anticipates and directs your desires. This influence, however, doesn't stop at individual brands. It extends across entire industries. The sophistication of loyalty programs didn't just deepen their reach within individual companies. It allowed them to expand into vast, interconnected ecosystems. The rise of coalition programs exemplifies this transformation. Think of airline alliances, like Star Alliance or One World, where miles earned on one carrier can be redeemed across a network of partners, or multi-brand loyalty programs that allow you to earn and burn points at diverse retailers, from gas stations to grocery stores. These coalitions create powerful networks, drawing even more data from a wider array of spending categories. Loyalty points themselves have become a de facto currency, influencing financial products like co-branded credit cards. These cards offer accelerated point accumulation for everyday spending, further incentivizing loyalty to specific brands and their partners, while simultaneously providing banks with a treasure trove of granular spending data. This data, aggregated across vast populations, becomes incredibly valuable. It's traded, analyzed, and leveraged to predict market trends, inform product development, and even influence personal data markets. Companies can gain insights into competitor performance, understand lifestyle segments, and even identify emerging consumer needs long before they become mainstream. The individual choice to join a loyalty program contributes to a much larger global network of information. Your morning coffee purchase, your flight booking, your grocery run. Each transaction feeds into a complex, constantly evolving database that shapes not just your personal offers, but the broader economic landscape. But with such immense power, wielded by these systems, it begs the question, what are the unseen costs of this unparalleled convenience and personalization? The appeal of loyalty programs is undeniable. Convenience, discounts, exclusive access. But these benefits often come with an unseen cost, a trade-off between personal savings and individual privacy. Every data point collected, every preference recorded, contributes to an ever more detailed digital profile of you. This profile, while designed to offer relevant promotions, also makes you vulnerable to algorithmic influence. It can lead to dark patterns in marketing, where choices are subtly nudged in a direction that benefits the company, not necessarily the consumer. Consider the potential for algorithmic bias. If historical data shows certain demographics respond to specific offers, algorithms might perpetuate those biases, potentially limiting options or presenting different pricing to different groups. While often framed as personalization, this can sometimes border on differential treatment. Furthermore, the sheer volume of personal data held by these companies raises significant privacy concerns. Data breaches, while rare, can have devastating consequences, exposing sensitive purchasing habits and personal information. The value exchange, once simple, has become opaque. Are the few dollars saved on groceries truly worth the detailed insights into your family's dietary habits, medical purchases, or travel patterns? The answer is complex and personal, but the question itself highlights the evolving nature of this loyalty contract. Consumers are often unaware of the full scope of data being collected, how it's being used, or with whom it's being shared. This imbalance of information is a critical component of the unseen cost, making truly informed consent a challenge. And as technology continues its relentless march forward, these ethical dilemmas only intensify. Looking ahead, the trajectory of loyalty programs points towards an era of even greater sophistication, driven by advancements in artificial intelligence and machine learning. We are on the cusp of hyper-personalization, where AI models can not only predict what you might want, but anticipate your needs before you even consciously recognize them. Imagine a loyalty program that suggests a specific brand of allergy medication before your seasonal allergies even flare up, based on historical patterns, local pollen counts, and your past purchasing behavior. Or a system that anticipates your travel plans based on your digital calendar and proactively offers flight deals and hotel recommendations. This level of predictive analytics promises unparalleled convenience, blurring the lines between proactive service and pervasive surveillance. The ethical and regulatory challenges will be immense. Questions of data ownership, algorithmic transparency, and the potential for manipulation will move from the fringes to the forefront of public debate. Regulators worldwide are already grappling with how to balance consumer protection with technological innovation. The battle for consumer attention and data will only intensify, with loyalty programs evolving into sophisticated AI-powered companions, constantly learning and adapting to your every move. Consumers will face an ongoing choice: embrace the convenience and efficiency offered by these hyper-personalized systems, or actively seek out alternatives that prioritize privacy and autonomy. The future of loyalty will be less about earning points and more about the intricate dance between algorithms, data, and our deepest desires. It's a future that demands a new level of awareness from us all. We've journeyed from simple green stamps to complex AI ecosystems. The promise of loyalty programs, once a straightforward thank you, has transformed into an intricate know everything about you. This is the core of the loyalty paradox. Programs designed to reward loyalty have evolved into powerful tools for extracting data, influencing behavior, and ultimately shaping a new economic reality. They create an unseen economic feedback loop, where every purchase, every interaction feeds into a system that then recalibrates to better understand and direct your future choices. The data you generate becomes currency, a valuable asset for businesses seeking to optimize profits and refine their marketing strategies. This isn't inherently malicious. It's the natural evolution of market forces meeting technological capability. But it does shift the power dynamic. Consumers gain convenience and occasional savings, but at the cost of relinquishing a degree of privacy and autonomy. The choices we make, seemingly freely, are increasingly informed, nudged, or even predicted by algorithms fed by our own digital footprints. Understanding this feedback loop is crucial. It allows us to view every loyalty offer, every personalized recommendation, not just as a perk, but as a data-driven interaction within a much larger system. It reminds us that in the digital age, loyalty is a two-way street, but the exchange rate isn't always obvious. What does it mean for our choices when our data is constantly feeding the machine, shaping not just what we buy, but perhaps even who we are perceived to be? The story of loyalty programs is a microcosm of our digital age, a testament to innovation, convenience, and the relentless pursuit of efficiency. It's also a stark reminder of the evolving relationship between businesses and consumers, where information has become a central commodity. As these systems continue to grow in sophistication, the power of choice remains with us. the consumers. We can choose to engage critically, to understand the value exchange, and to advocate for greater transparency and control over our data. The loyalty paradox isn't a problem to be solved with a single answer, but a complex challenge to be navigated with awareness and informed decision-making. By understanding how our discounts became a data goldmine, we empower ourselves to make more conscious choices in an increasingly interconnected world. Stay curious, stay informed, and always question the unseen forces shaping our economic landscape. What are your thoughts on loyalty programs? Do the benefits outweigh the privacy concerns for you? Share your perspective in the comments below.